Hello, everybody. Spencer England here, Velocity Financial. I was recently asked this question, provided the answer, and thought it would be a good idea to share this with everybody. In case you're not familiar with Mortgagee Letter 2013-04, released January 31st this year, there are some very important changes to mortgage insurance that have happened in some cases that are going to happen as well. The first of which is that mortgage insurance went up for any case number that was assigned after April 1st. For those of you that don't know what that means, you don't get a case number for FHA if you're using FHA financing until you have contract acceptance. So the seller has accepted your offer, and then you've given your fully executed contract to your lender, so the lender then can upload your file to the chosen lender that we're going to go to, and then also get your case number assigned by the Department of Housing. So at any rate, the other thing that's happening is on June 3rd, they're changing how long the mortgage insurance stays on there. So currently, your mortgage insurance will drop after 10 years that you've had your FHA loan automatically. After 5 years, you're eligible to contact your lender and see what their procedure is for having the mortgage insurance dropped. A lot of cases, they'll require that you pay for an appraisal demonstrating that you have at least 22% equity in the property, and then they'll allow you to drop your mortgage insurance. What's happening for all FHA case numbers assigned on or after June 3rd is that anybody who doesn't put a 10% down payment on FHA, which most people do not, they will see their mortgage insurance stay for 11 years. That's if you put a 10% down payment. If you're like most people and you put a 3.5% down payment, that mortgage insurance will now stay attached to that loan for the full 30 years. Okay? So that's just something to keep in mind. Chances are somebody's got a 10% down payment, they probably have some money in the bank, semi-decent credit, they probably would qualify for conventional financing with private mortgage insurance, which is lots cheaper than FHA. For those of you that don't know what the mortgage insurance change was, for loan amounts under 625.5 and LTVs above 95, which is what most FHA financing is, the mortgage insurance changed from 125 basis points to 135. What that means is 1.25% per year, which is like adding 1.25% to your rate, was raised up to 1.35%. And that increased further in high-cost areas. So if you're in like Hawaii or New York, for instance, that went from 145, oh, I'm sorry, that went from, that's if you're under that loan amount, went from 150 up to 155 if you're over that, if you're putting a 3.5% down and you're in that loan amount range. So at any rate, I hope this information is helpful. Feel free to call me with any questions. And thanks again for tuning in to Spencer England's mortgage blog site. Call me with any questions. Thanks so much, guys.